So there is one name which continues to hold up high, and that's Mahindra and Mahindra. What a fabulous quarter it's been from them once again. So let me welcome on board Rajesh Jejurikar, the ED and CEO, Auto and Farm Sectors, M&M, right here in the studios. Rajesh, great to have you with us on ET now once again. I guess you must be used to hitting it out of the park every quarter by now.
Firstly, Aisha and everyone else on the panel, thanks for having me here. And it's always good to come to the studio. It's our chance to catch up with you all. Otherwise, you're normally so busy. So
everyone's erupting. That's a consensus in terms of.
So it's worth the
That should be our line.
worth the hike to get here to meet all of you in person. Yes, it's been a good quarter, and it's the first time we crossed 50,000 crores in a quarter as a revenue, and it was a 26% growth plus a very strong PAT growth consolidated of 4,675 crores, I think, which was a 47% growth. So overall good, and that's been driven by multiple parts of the businesses. So auto, SUVs, LCVs did very well, which is after a long time that segment showed growth. Tractors has had a very strong domestic tractor business. So yes, overall we feel good about the quarter that's gone.
If you can also take us to the farm sector, how is it doing actually? Because we had good monsoons last year, and still and now there's no correlation of tractors with monsoon now. But how is it ramping up there actually?
Yeah, so tractor industry actually saw very strong growth, and this year will end at about 24 or 20, between 22 and 24% for the full year. So it's turned out to be a very strong growth, and someone was reminding us yesterday that just a few months back you said it'll be low double digits, and I've spent many years now in tractors, and the one thing that we haven't developed is the ability to forecast the short term. I think we have a much better feel of how to project the long term, but we haven't really got the ability to project the short term. But the GST was a very, very strong trigger. The good rains that happened in 2025, the GST trigger is very significant because 10% drop in I think close to 10%, yeah, 8-9% drop in selling price of a tractor is very tangible, and the prices because of commodities had gone up so much over the last 3-4 years that in some way that was creating a kind of hindrance to purchase. So the GST was a big enabler, and we've seen very strong growths. I won't say there's no correlation with monsoon because there is the sentiment that a good rain triggers. But reservoir levels have been very healthy, and which is why we think even as we get into next year and the current Kharif sowing, which will start, the sentiment around the fact that reservoir levels are good is, I think, a good enabler. We are at a very strong market share now, 44.1 as well. So.
And you're able to up your guidance from about 20% for FY27?
No, see firstly FY27 is not going to be anywhere near that range because of the base effect. I mean, 24% is a huge growth, which is not anticipated. I mean, even like I said, just 3 months back, we said it'll probably be low double digits, up to 12-13%. So we have to, as we think about F27, look at all the enabling factors in the environment. Many of the macros are in a very good shape. So government spending is strong, farmers' terms of trade is very positive, reservoir levels are good, but we will calibrate F27 looking at the base effect, and we'll put that number out in May.
And the margins in the farm segment has been a little sluggish, right?
No, actually they haven't. We increased our tractor margin by over 2.5 percentage points this quarter. The core tractor margin is about 21% PBIT percentage, and when we announce farm, it's around 20.5. What you're seeing is an effect of impairments that we've taken in 2 of our international subsidiaries, which is why the PAT, when you're looking at a PAT level, we've seen a 7% PAT growth at PAT, compared to a 26% revenue growth. But that's because of a 550 crores impairment we've taken in two international subsidiaries.
And you have additional tractor capacity, engine capacity as well, right? Coming on stream between March and June?
Yeah, that's right. So Swaraj engines, the capacity was to come up by June. Then there was this huge spurt in demand, and then we were working to prepone to get that, which affected us somewhat in November, December, in the festive season.
But you've delivered on all fronts, right? And I'll repeat the question, which I gave you the minute you entered. Is this sustainable?
Is what sustainable?
Is a beat across parameters, just in terms of the manner of the performance? Is that something? Is this the base basically? Is what I'm trying to understand. Is it you only going north from here in terms of performance across parameters?
Yeah, let me try and answer that a little qualitatively rather than numerically.
Sure.
We have grown in SUVs because we have had a strong proposition, exciting product portfolio, products which we've been able to price well. I think that will continue. We do continue to have a very exciting portfolio. We had unveiled the new IQ platform with the Vision S, Vision T, and Vision X, all of which have got a very good response. We just launched the 7XO, which is the upgraded 700, which has got a very good response. Even minor changes we made in Bolero and Bolero Neo, which we launched in November, it has made such a significant difference to the demand, right? So there is something in the brand DNA. When we back that up with appropriate product, it is getting us momentum. So I think the SUV momentum, without getting into percentage, is here to stay. The 9S, the new electric we've launched, has got again a very good response. So SUVs will stay. The LCV segment actually has been very slow industry growth for over 2 years. And we were expecting it a few quarters back to kind of come back into some kind of a growth that got triggered finally with GST rate cut. So we've seen strong growth. 20% we grew in LCVs in this quarter. I think that LCV momentum will continue for a while because GST triggers not just a specific category benefit but also an economic level of economic activity. And with an increase in level of economic activity, commercial segments do pick up. So we would expect LCV to continue. Tractors, we are very strong on market share. We would expect to continue that. We would not expect the industry to grow at 23-24% next year. But we would expect a reasonable level of industry growth, and we'll work a little bit more around that by May. We would get a benefit in consolidated farm business profits next year because we have taken two large impairments. We've taken some large impairments this year, which will have some next year still, but not to this quantum. So that will provide an upside at a consolidated farm level.
But if I were to specifically, Rajesh, talk about SUVs, what do you think will drive business going forward? Would it be scale, localization, pricing, or will continue to be PLI benefits?
PLI benefits are only on the electric.
Yeah, I'm specifically talking about EVs.
Okay. So on the EVs product portfolio, the PLI benefits will, of course, because we right now have it on all of 9E. On the 9S, which we've launched, we have it only on the top two variants. We're expecting it next quarter. The whole B6 volume will come in also in the Q1, which will help the overall recovery, let's say, of investments that we made. The fact that we've since launch had a positive and a contributing EBITDA, on EVs, I think is a very good thing. When before we were launching, the question was, when will you turn EBITDA positive? And most people expected that we will not turn EBITDA profit for a long time. Just in this quarter, we made 175 crores EBITDA on EVs. Just an indication that it is possible to make operating money on EBITDA at an EBITDA level on an electric vehicle business. So it is a very good management of cost to your question on localization and how we are approaching it as well.
You've been talking of listing of the GEMS business, and which includes the EV business as well, which will be listed in a year or two. Do you think you will be able to scale up to the profitability level within next 12 months in EV?
Yeah, so just to clarify what we've said about listing when Anisha said made this comment in when he was in Davos is on what we call the last mile electric vehicle business. So we have two different companies. One is the SUV business, which is called Mahindra Electric Automotive Limited (MEAL), and then there's the last mile mobility business, which basically does electric three-wheelers. What we're talking about potentially listing towards the end of 2027 is the electric three-wheelers. We've not had any conversation about listing the SUV business.
And there the margins, because I remember you speaking to us a couple of quarters back where you said that you will come out with the P&L for the EV business as well. How's the P&L looking in terms of, you said EBITDA positive you made in EV, but profitability wise, is that profitable, going to be profitable in the next 2 to 4 quarters?
You're talking about the electric SUV?
Electric EV.
Yeah, it is profitable at an EBITDA level. It will, of course, take time to become profitable at a PBIT or a PAT level because, we made substantial investments. So there's a depreciation impact which is going to stay for a while till, maybe we scale up volumes and so on. But there is a new investment coming in as new products are coming in. So right now our focus is on the cash break even or the cash profit, not at the PBIT level.
Your market share in SUV was over 24%, and you had guided for 10 to 15% growth in SUV. With the kind of momentum that you're seeing in SUV, are you looking at the growth target above 15% now?
Well, we have given that number as mid to high teens for F26, and we are going to cross that. Definitely, we already are on the path to that. So yes, we haven't given any guidance for next year yet. So wait till May for that.
No, but the PLI benefits. How does that, or how do you plan to digest that? You plan to digest it by reinvesting? You plan to digest that by adding to your profitability? How does that play out?
Yeah. So Harsh, it's normally will be a combination. We do want to, ultimately the game is about driving EV adoption and building the scale in the business. And that is what will lead to a recovery of investments as depreciation gets better absorbed. So the intent is to drive volume and growth. Typically, when you get any upside benefit, you will always decide how much of that needs to go into driving growth and how much of that needs to go into protecting the margin. So, it will be a balance. It won't be either this or that. Typically, we would want to keep volume momentum as the top priority right now in the EV business and drive, the scale and adoption of the business. And we are already seeing that, as word of mouth is building around usage of the EVs. There are many, many more customers now who have confidence that you can get a 500 plus kilometer range, which takes a lot of the range anxiety away. Charging infrastructure is improving. We ourselves are setting up charging points on critical highways. So right now, I think is the time to see the category growth.
Rajesh, what to your mind has changed in terms of consumer behavior and how they are looking at EV adoption from when you came out with the first EV to now when you have so many on Indian roads?
Yeah. So, the way our strategy, Aisha, the way we had played it out was don't market or position the EVs as an economic reason to buy. Position it as a lifestyle. And it indeed is. It's not just the design, but the quietness, the tech that the vehicles offer. So get consumers to buy in for reasons other than economics. It's not like an Indian consumer is ever going to say economy is not important. Okay, so
it's a very price sensitive market.
It's a very economy value driven market. Irrespective of how much wealth you have in India, most people will want value and do calculate. I made this trip. You can do anecdotally Mumbai to Pune on the cost of 1 cup of coffee. So it's literally that. And but that was not the positioning at that time. The position at that time was more around the lifestyle, the experience of owning an EV. So from a consumer mindset, I think a lot of the charging anxiety, especially for those who primarily have city usage, is gone. Has charging anxiety gone away for people who want to do long distance? For some, yes. There are several customers who have done more in even a 6-month period of ownership, done at least 400 plus kilometers a day. There are people who are now willing to do it. We have customers who have done Kanyakumari to Kashmir, taking our EVs. So there are people who are doing this, and that's all in a kind of testimonial way, building momentum and creating word of mouth, especially in EV communities. On yes, this is doable. Which is why we find a lot more traction now, say for example in 79 kilowatt hour than 59 kilowatt hour. Customers don't mind paying that upfront to kind of be sure that you have a 79 kilowatt hour which is giving you the range. So there's a huge shift in terms of acceptance, worries on quality, reliability. I think all of that is behind us.
And what about SUVs per se? I mean, EVs or ICE, are we set to become, say, the Texas of the East, the SUV capital?
So the good news and the opportunity, right? So 5-7 years back, UVs as a percentage of passenger vehicles was in the region of 20 something. Today that is 68 something percent. So it's a huge shift by way of UV penetration. That being said, to your question on how much of that is core SUVs, and that's the space which we primarily play in, vehicles which are adventure ready, have the right ground clearance, seating height, all of that. While we've done very well, we think there's still a lot of opportunity to get people more into mainstream core SUV usage, and that's the upside to your question, Harsh.
No, so if I were, sorry, I'll take this one. So if I were to just kind of zoom out and try and understand everything that's played out over the last couple of weeks, you've done fabulously well, but there are some risks that are emanating, especially from the FTAs and the trade deals that India is striking. Whether strategic or otherwise is a different question. But what is the impact of that on the Indian manufacturers, EV manufacturing landscape? Do you believe that there's going to be a significant dent from global competition which will likely get access to Indian markets?
Yeah, Harsh. So firstly, let me put out and say I think the government has done a really good balancing job. Now let me tell you why we see no risk.
Sure. No risk.
No risk.
Okay.
No, I'll do some numbers for you quickly.
Sure, absolutely.
So the quotas start at a price point of 18,000 euro.
Yes.
Okay. So let's say 30% customs duty on 15,000 euro. So 15,000 euro, 30% customs duty. There are almost no cars in Europe less than 4 meters because the 4-meter concept is an Indian invention.
Correct.
Right? So as soon as you cross 4 meters, you pay 40% GST in India.
Correct.
Okay, so car priced at 15,000 euro, which is where the quota starts, with considering logistics, dealer margin, all of that in India will be 35 lakhs ex showroom.
Got it.
Okay, now 35 lakhs ex showroom for a 15,000 euro equivalent quality car, which is really the base end, is way more expensive than the top end of our cars, which are 21 lakhs ex showroom. There's no comparison at all.
Sure.
So there is zero risk.
Okay.
And there's an opportunity.
That's true.
Because we can sell from here to there.
That's true.
Rajesh, how do you look at scale up of the entire capacity for EV? You're looking around 4,500 per month. Going into FY27, I think the plan was to increase it to 8,000 a month, and then your new models are already having 4 months of backlog. So how do you plan to scale up that?
Yeah, so basically that's exactly the plan. So we are right now at about 4,000 a month. We'll add about 3,000 to 4,000 during the course of the year, starting now, which is what should take us to 7,000 average for next year, which will be a very substantial revenue business. So just think of it that way. So when you're doing 7,000 a month, we're talking about creating a revenue of just on, simple based on our selling prices in the region of 19,000 crores.
And how do you managing the raw material inflation? Are you passing on some of the costs?
We've just taken a 1% price increase on all our products, average.
And will that continue to happen? going forward as well?
Yeah, so
Or you feel that now it's...
No, I mean, see, the balancing here is to, when we see continued commodity inflation, then we have to correct our prices and we have the headroom. What we don't like to do is a knee jerk, okay, commodity has happened 1 month, now let's rush in and take a price increase, because we don't want to upset our biggest strength, which is the right value proposition to customers.
Okay, Rajesh, we could go on and on chatting, but thank you for your
Thank you.
time today, and thank you for
Thanks,
making
Aisha.
it
Thanks, Harsh.
to the studios. That's, of course, M&M extremely bullish, and why not? It seems